Good morning, everyone. How y'all doing this morning? Hey, Goldeneye. Rasto, how are you? A little bit of change. A little bit of change. Had some news, of course. You know, tariff drama starting again. So we have a gap down, and it filled the gap in the overnight, but it won't count in RTH if we open down here. So we're just sort of filling out. If you look at this area here, there's some volume here and there's some volume here, and that's what's really cushioning this move down. So when you have a gap means change. And what has changed? The macro has changed, right? And welcome to the folks joining us on YouTube. Thanks for being up with me in the middle of the night. So how do we look at this now? What are we going to do? Okay. As a retail trader who's a day trader, you don't have to catch the big move up or down. The smartest way to play this, the smartest way to do business, is to let the large players build out some structure, and they've kind of done that. And then what we do is we just stick to our trade setups. So if your trade setup is the look below and fail, and what is the look below and fail? Really, the look below and fail is when the market looks below a level, fails, comes back up. You go long, you've got a place to put your risk, and then you sell into that move higher, right? So if that is your trade, and the inventory is above you, say you were doing look below and fails here, you know that there's going to be resistance here because there's going to be supply. Now, as we get into RTH, if we just kind of go back and forth like this, because the entire session inventory is short, because it's all underneath the close, you'll expect some short covering movement up. If we don't get any short covering movement up going into the open of RTH, look for lower, okay? So what happens now is we had a relatively peaceful period of time for the last 3-4 weeks where we didn't have any tariff drama. Now he's back at it. And when you have tariffs, you go and change the macro. I am not a macro trader. So, and in order to be a macro trader, you need to have a crap ton of money. Right? If you're going to bet on a directional move in a market, you better have a lot of money to back up that trade to be able to hold it through its gyrations. We don't do that, right? So I will always let the market tell me what's going on. I'll do some scalping until there's a clear path. Okay? Everybody wants to try and nail the bottom and nail the top. Like, that's great, right? I'm sure it looks good on your YouTube channel with the rented Ferrari. But what I say, if you're smart, if you're trying to do business intelligently, just trade in the move and let the larger traders, like, so say we're trading back and forth. What does that mean? Trade in the move, right? Here's the move down. We can trade it back and forth this way, right? If that's possible, go ahead and do that. If it breaks here or if it breaks there, go with it using risk, right? You have to have a trade setup. Like, I'm not a breakout trader, right? I don't trade breakouts because as a large trader, I would always sell my supply into a breakout because it creates buying. to the upside. If I'm a short seller and it breaks to the downside, I cover, right? Because it creates selling. Now, I don't chase price, so I'd never chase a move up or down, right? I like to go back and forth, and if it goes up, comes back, and then goes up again, okay, that's a look below and fail. So that's sort of a meandering way to say go with moves. Let's go take a look and see. There's that overnight high, which came right into Friday's range and then immediately sold off again. So while overnight inventory is 100% short, because the close is up there, it's all underneath the close. Short-term inventory, right? The inventory of the last couple of hours, for say even 3-4 hours, right, is all above where the current price is. So when that happens, when inventory is above price, that means when the market starts moving up, it's going to encounter some resistance. Okay? So all that means is if you're going long, say you're long at 64, when you get up to 70, when you get up to 69, don't expect this right away. There's going to be some supply here because we traded for what? 8 hours in this area, right? So what I do for that, and it's the same thing every day, is I go in and get the balance levels, right? My balance is 70 3/4 to 74. Double it to the downside, 64 1/4. Double it to the upside is 80 1/2. So I took a little test trade here, just with a couple of micros a little earlier, right? It did a little look below and fail. So I bought 65 and I sold 67, right? Now, I'm not going to be buying any Gulf Streams with that, but I just wanted to see if that little rotation worked. Now, if we get above 67, right, we're going to look for sellers. Where would those sellers be? Well, they're going to be right there at the top of that candle, and that candle. So say you are still long at 64, 65, 66. You can anticipate when you get to 69 1/2, 69 1/4, that there is going to be resistance, right? That way you can get out of your trade before somebody takes your customer, right? When you are long, you are a merchant. You're a merchant that has supply. You need to turn that supply into cash. Otherwise, you're sitting with a bunch of inventory that you can't sell, and you're going to take a big, huge, stinking loss on your trade. So sell into strength when inventory is above you. Does that make sense? Right? It's all about managing expectations, right? And if you understand where the selling is going to be, then you can manage your expectations around that. See, look, we didn't even come up to that level and they started to sell, right? The top of the candles are where sellers start to compete and initiate. That's what causes the price to go down, right? If sellers don't have to compete, the price will keep going up. But if you start running out of customers, it's a fancy way of saying order flow, right? Order flow is a fancy way of saying customers. That's why everybody says, oh, are you an order flow trader? I'm selling order flow software, right? Order flow is just a fancy way of saying customers coming into the store, okay? It's a marketing term, right? So how would you know sellers are there on a big drop? It can look very different on tick charts, time frames. I don't know what a tick chart slash time frame. All I know is, in a simple world, Avalon, the top of the candle is where if you and I are selling at $5, right? Check this out. I don't know what you mean, no structure. For example, if you and I are selling at $5, right? We're lined up to sell at 5. And you go 4.99, I'm immediately going to punch you in the throat and go 4.90 and take your customer and probably hit some bids. That'll cause price to go down. Don't overthink it. The top of the candle is where the sellers initiate. I don't know what you mean by no structure, right? It's really simple. There's the top of the candle, there's the top of the candle, there's the top of the candle, there's the top of the candle. Now I don't know what tick charts look like. I just use a simple 1-minute candle chart. You know what I mean? I'm a simple guy, right? So if I was long 65 and it got to 68, 69, and I notice that it starts selling off at 68 and a half, I'll hit the bid and get out. Take my profit, say thank you very much. Make sense? Just look at the top of the candle. Doesn't matter if it's a... I don't know what tick charts look like. I don't use them, right? So unfortunately, I can't answer that. But all I know is if you just use a simple 1-minute candle chart, which everybody has access to, there's no reason to overcomplicate this. If I know that Dave and Chard and John and Lonigan and Aries and Raj, if they're all selling at 68 and a half, well, I better undercut them, right? Think like a seller, not a short seller. Think like you're selling size and you have to compete with other sellers. See how the market came down from 68 and a half all the way to 66? We kind of anticipated that, didn't we? We knew that there was going to be a seller as soon as you get up to 69 and a quarter. Simple, right? Hey, Moran, what's going on? Right? I don't like overcomplicating stuff because then it makes execution a pain in the butt, right? If you have a simple way of doing business, your execution's going to be smoother. It's going to start becoming more like second nature, right? The more you overanalyze stuff, the worse your trading's going to be. Like, I have never seen anybody trade well when they have like a 16-page trade plan and they overanalyze every single candle structure. I've never been able, like, they don't execute in a smooth manner. Does that make sense? Right? And then you just watch the offer, right? Spend some time watching. See the bottom of those candles? That's where they stopped selling. This is where they initiated selling. So now the market will just rotate as it sort of balances, right? Right? They've got some cheap product from here and they're getting rid of it here. That's all there is. No reason to overcomplicate anything. Right? You don't need much. All you need to do is look at the top of the candle. Look, that's trend down. So if you were short and every single candle opens and can't take out the top of the other one, well, you know sellers are competing. If sellers are competing, price is going down. If sellers aren't competing, cover your short. Simplicity, my friend. Right? Life is difficult enough without overcomplicating everything. And unfortunately in trading, they throw so much information at you they puke all this information at us because they just want to baffle us and keep us in a fog so it's easier to steal our money, right? You know, just get in, get out, take your money, manage your risk, don't overtrade, right? It's a simple business. It's not easy by any chance. They don't make it easy because they don't want us in it. You know, they don't want day traders. They want people to buy stock and go away, come back next month and buy some more and go away so they can, you know, build assets under management, right? That's why you notice every time that the market's really, really busy or some event happens, you can't access your brokerage account. Anybody notice that? No? I sure as heck notice it when you guys are all complaining. I can't get into my account. I can't do this. I can't do that. Of course not, because the infrastructure is not set up for you to be trading in volatility, right? Institutions and large funds and those people, they pay hundreds of thousands of dollars for data and millions on infrastructure and electronics, right? What do we pay? 50 bucks a month, 100 bucks a month for our quotes? When you say look below and fail, you mean the price closed underneath the level or peak, right? Oh, so look below and fail is a simple trade, right? Right? Here's the level that you're watching, right? The market goes underneath it and comes back up, which means the sell orders that took the market underneath this level are complete. So you buy here, you put your stop there. What's the business reason? The business reason is that no one needs to sell under 4 quarter. If somebody comes and offers under 4, the business reason for your trade is no longer valid and you exit the trade, right? So when markets run out of supply, they rotate up and you sell into that strength. That's really all there is. Now the timing, right, is something that you work on because you take that trade under all different kinds of market conditions. So you will get experience, right? What I like to do in a perfect trade is when it comes down, goes back up, then comes down and tests it, that's when I like to buy. But sometimes it'll do this and you just got to grab the offer, right? It's really nice when it comes back and it tests it. It gives you the time to set up. Sometimes it doesn't give you the time to set up. Sometimes you miss the trade, right? And there's two things in trading that you have to be comfortable with. One thing in trading is you have to be comfortable with being wrong. The other thing that you have to be comfortable with is missing trades. And if you can master those two things, it'll make your life a lot easier. Hey, Lonigan. I've been only telling you guys that for 4 years, right? Exactly. Right? Yeah, they don't sell stock. They borrow against their portfolio. It's pretty funny. If you're long 62, and welcome to the stream, Oscillator. So you're targeting value area high from the session of the 7th. I don't even know where that is. Where is that, man? Can you give me a number? What's value area high from 7-7 so I don't have to move all my charts around? Was that 6280? Well, sure. You could target that. Now, let's talk let's talk turkey. If you're targeting 6280 and you're long at 62, what is your basis for the trade? How long are you willing to hold it? How much pain are you willing? Like what's your stop at 62? Right? If you're long 62.62 and you're looking for an 80 print, where's your stop? How long are you prepared to hold that trade? You understand that we're on a gap down and inventory's overhead. How long are you prepared to hold that trade? I'm not saying there's anything wrong with your trade. You might have a thesis that works, but right now there's a seller at 69. So how long are you prepared to hold that trade? And how much risk are you willing and can you actually afford? Right? Everybody talks about risk tolerance. A lot of people have a higher risk tolerance than they have a risk ability. Like a lot of people will say, "Oh yeah, I can be out, 10 points on the trade," but they've got a $2,000 account. That makes no sense, right? So risk tolerance and risk ability are completely different things, right? What is your ability to hold a trade, right? Can you be down 2, 3 grand on a trade, right? Do you understand what I'm saying? I'm not saying there's anything wrong with what you're thinking, but how do you justify it? In a choppy market, when inventory is overhead on a gap down, I'm happy to make 2 or 3 points. I mean, I'd love to make 10, 15, 20 points on a trade. But is it economically viable given the market conditions that you're in? You know what I mean? I'd love to play guitar like Carlos Santana. But if I just pick up a guitar today, I don't think it's going to be possible. You know, right? And the market will tell you whether or not your trade. I mean, if there's sellers at 67, how long are you going to hold that 62? Hey, if I was long 62, I would have been out by 67 for sure. I'd take 5 points. 5 points on one mini is not bad. It's $250, right? Three minis, that's a $750 trade. How many retail traders make $750 a day consistently? Not very many. Probably less than 1%, right? You don't need a lot of points to make money. 3 to 4 points on 3 to 5 contracts will get you in, get you out, get you paid, and consistency is key, right? See, everybody wants those big trades, but is it possible? I'm selling sunglasses and it's been raining for 3 days. Am I going to make 20 grand today selling sunglasses? Probably not. You have to have realistic price targets. The other thing, what large traders do, is that they'll use their orders to tell them. Like, so say you're long at 62, right? And you bought 10 contracts. Well, you put two for sale at 65, two for sale at 67, two for sale at 69, two for sale at 71, just as an example, right? And if the market gets up to 65s and stalls and starts moving back down, it kind of tells you that nobody wants to buy your product at 71. You know what I mean? You don't want to be that guy trying to sell. sell a car at 4 times what anybody's willing to pay for it. It's just going to sit on the lot, right? You got to turn your inventory into cash, right? That's the key to this business. Turn that inventory into cash and then go do it again, right? That's how you get cash flow, right? Yeah, I have a friend of mine, she says to me, listen, don't tell me all that. I just want one trade. I just want to take one trade and then retire and never do it again. I'm like, well, I can't do that for you. I wish I could. Because if I could, I sure as hell wouldn't be on YouTube at 7:30 in the morning, right? If I could take one trade and never have to work again, you know, that's not trading. You know, see now this is seller here. See how the sellers have moved down? All you got to do, folks, is zone in a little bit, right? The seller was here, then they were here, then they were here. Look, they're right here now. Look at the top of those three candles. Boom, boom, boom. Sellers at 65 and 3/4. And until the offer lifts over that, the sellers are competing. Why are the sellers competing? Because they want to capture the buying. See, and this is the problem with chart-based trading. There's no sense of urgency, right? When you're actually in a business and your client gives you an order to sell 100,000 shares, and he sees maybe 50,000 shares print on the time and sales, he'll call you and he'll say, were we a part of that? And if you say, no, I haven't sold any, he will literally rip your throat out, right? There is there is no sense of urgency when you're retail trading. That's why the chart should help you get some sort of a sense of urgency, right? You never want to be holding inventory when a market is selling off. You never want to be shorting inventory when a market is rallying. That's a sure way to blow up accounts, right? See, now we're lifting over that 65 and 3/4. The sellers have seen buyers. We'll be looking for our next sellers up here. Right? It's choppy, right? We jammed all of these poor people here. We got them all jammed long. They're selling off. It's going to take a while to absorb that inventory here before we can do this again. We might even go lower before that happens. So we've got a couple of things happening this week that you need to be aware of. Number one, you've got this gap down and a change in macro conditions, right? What's the other thing that you've got starting this week? As I play the music from Jeopardy. Come on, you guys are traders. You should know and understand what you're doing, right? Should have some sort of awareness of the business that you're in. Somebody tell me what's going on this week. Thank you. Earnings, right? So it's earnings and you have a change in macro. What does that mean? That means indecision, right? What does that mean for us? Probably crappy, choppy trading for a while, right? So what do you do when that happens? You trade less, you size down, right? You know, you take what you can get. You know, yeah, you got tariff stuff and earnings. So large traders, remember all those large fund managers that were away for the 4th of July who are now back at work? Well, now they've got to sit down with their investment committees, with their pods, and they have to figure out how to put money to work. They don't trade like we do. They don't, just shoot from the hip and try and make money. They have analysts, they have, you know, expert networks. They have all these things that give them information that tell them we should buy this stock because of this and that and this and that, and then they'll start positioning themselves. That takes time, right? Yeah, and then you got all this stuff, right? CPI, Magnum PI, all the PIs, right? You've got all of this stuff during an earnings season and a change in macro because the president, for some reason, cannot just pick one thing and stick with it. He keeps jumping all over the place, which is probably a nightmare for any securities analyst who has to like build models. My God, I feel bad for those guys. So for us, because we don't create order flow, right? We scavenge off the order flow that the institutions create. We have to be smart. Trade less. Don't trade as much. Trade smart. It's a bit messed up tonight, Howard. Actually, given that everybody was, everybody this weekend was, oh my God, gap, gap. I thought the gap would be a lot bigger, but I think this market's getting used to the drama. Hey, Derek, what's going on? Might be a slow start to the week. What do we have for earnings tomorrow? We have Black Trident. BlackRock's got earnings next tomorrow, and the banks, right? I think it's J.P. Morgan or Morgan Stanley. They're starting out with their earnings. See, this is choppy as hell. Why would you want to put your money at risk here? This is a commission grinder, right? This kind of market right now, it might change in half an hour. But at this point in time, all it's going to do is just grind up your account with commissions. Right? It would be nice to get some sort of, let me say this without sounding pompous. It would be nice to get some sort of macro stability, right? Where they put a policy in place and just leave it, right? And let the world go on. This flip flopping around, it doesn't really instill a lot of confidence, and I think the market's ignoring a lot of it. So this is the thing. I do see some rotation into Bitcoin. I mean, we're trading what 122, 300 on Bitcoin now. Bitcoin is above its cost basis, right? It's kind of clear skies. If you look to the left on Bitcoin, there's nobody that has Bitcoin at 150,000 that's selling into this, right? Thanks, Moran. Just 3.5 years left, eh? I told you this is going to be. I didn't think he'd be this haywire, you know? I thought, he's done the job before. He won't be this haywire. He'll be a little bit calmer. But, guess I was wrong. Wouldn't be the first time, won't be the last. God, this is horribly choppy. As the world wakes up, the US, it's going to, people are going to start doing their thing and start executing their orders. I would really, I'm overcautious as a trader because I don't like to lose money unnecessarily. Some people enjoy it. I don't. So I spend a lot of time watching. Let's see what happens. This could be a look below and fail of 64 and a quarter. But remember, there's going to be sellers at 5, 6, 6.5, 7 if you're long. Yeah, there's that 66 and a quarter seller. Right. So what I'm talking about is just watching the top of the candles. You could see that there's a seller there and there. Right. So if you had gone long on this look below and fail, is that an economically viable trade for like a point and a half or a point? The problem is we still have not filled all the short positions that are underneath us. And that's why it's not selling off. You notice it's sticky, right? This market doesn't really sell off in a smooth manner because we've got shorts trapped here, 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 right? And then we've got shorts trapped underneath as well, right? If you look underneath, when a market one time frames up, right, there's that short bid is here. That's what's supporting this thing. So until we take out 62.40, right, there's really not much drama. We're this in this big distribution balance up here, right? This is all just a big distribution. And look at that gap, right? There are gaps all over this thing. There's a gap here, and then there's a gap here. There's three massive gaps underneath us, and multiple short positions that are less obvious to the naked eye, right? So that's why the market, markets used to do this. Now they go up and they're like, because every time they sell off, that short bid just comes in and stops the downward progress like it's doing right now, right? Very frustrating as a short. There we go. Had it on the wrong chart. There's a look below and fail, but right to where the sellers are, right? That candle, that candle, that candle. Now, if we get above that, see if we can take out the stops at 68 and 3/4, right? Hey, AZS, what's going on? It's, yeah. And this is the thing where you have to it'll be frustrating. You'll wait for the right trade, and then you lose concentration. Like I had it on another chart, put it back, damn, the trade's over. Right? So don't freak out if you get frustrated, folks. Just remember, take it easy, ease into the week. Don't be too over eager to trade. Do some watching. Figure out where your best setups are. If you miss trades, don't worry about it. There'll always be another one. You guys have any questions? Yes, no. So Howard, we'll see if we can move that point of control down, right? Now, normally, had there not been a macro change, right, it'd be nice to pick a spot and maybe build a little long position. But because of the news, I'm less inclined to do so. How do I look at gaps down? As change. So when a market gaps down, the product's on sale, right? So if you're paying $5 for something last week, all of a sudden Sunday night it gaps down and you're paying 3. Hmm. Right? Something has changed, right? And what has changed? Well, El Presidente has flipped the script, right? Gaps up are change as well. They're a lack of supply. Gaps down are too much supply. Right? So let's see what he does. Maybe this morning he comes out and says no tariff. You know? Maybe somebody switches out his Diet Coke for caffeine-free Diet Coke. You know? How is the POC different from VWAP? Well, VWAP is volume weighted average price. The point of control is just 70% of where the inventory in that session is priced. Sometimes they line up. The point of control is a market profile specific uh, thing. It's basically like, so if you have product between $3 and $5, and the point of control is 4, then it means that 70% of your inventory is priced at $4. VWAP is an institutional execution standard. So like institutions don't use TPO charts, right? They don't, what they do is VWAP. So RC, if you gave me an order to buy 1 million shares of stock, I would try and get you prices underneath VWAP. If you told me to sell 1 million shares of stock, I would try and get you prices above VWAP. It's how traders are judged in the old days. Now everything is electronic, so everything is VWAP execution standards. Like, you know, so if you know that if you're getting prices above VWAP and you're a seller, that whoever's doing the trading for you is good. If you're getting prices under VWAP and you're a buyer, do you understand? You'll you'll send orders to that firm the next day. No problem. Yeah, most people, I'd say probably what, 98% of people have never even heard of a TPO chart. And VPOCs and pointers of control, that's all sort of foreign to them. I still use TPO charts because it tells me really quickly, right, sort of from a bird's eye view, that the inventory right now is above us. So that's why every time we get up to that 80, 62, 69, 68 level, there's resistance, right? Hey, Phil, how are you? Long time no see. So let's see if we can take out that overnight low. As the market comes up to this 64 level, I'll try a little test short if it gets up here. Otherwise, I've got bad trade location. vwap71. Thanks, Dave. Right. We'll try a little short. And if it takes that overnight low, let's see. I want to see how the bids come in, because we should have sellers there and there. Now, if I lose the seller at 63, then I know that shorting is not a viable option. Right? So you lose the seller, comes back in, wait for the next candle to open. Yeah, it's not. I'm just out one micro at, where is it, 60, 63? Yeah. And I'll go put in a bid, maybe 61 and a half and see if I can get hit. And if I can't, I'll just scratch the trade. I'm flat. Let's see if it takes out that overnight low. That's sort of the second trade I've taken this morning. See if my brain's working. I know I've got weekend brain. You got some holidays coming up? Good stuff. Holidays are good. Watch, it'll probably leave a poor low. $62.58. The stops on the half hour are at the top of every half hour bar. And this stop here at 62.58 is based on, there was a stop. Let me just make sure I've got, yeah, there it is. That O low from, I think, the 7th. That's why there's a stop there. And remember we had a poor low? That's really an area of interest down here at 62.46. If we get down to it, I'm very curious about. Yeah, we've got a poor low. I see why you're going long off of it. Your risk isn't that great, so that's okay. You can manage that risk. Right, your stop's just under 61. Oh boy, oh boy. Probably going to see some sellers at 63, 62 and 3/4, Phil. Just so you know. Yeah, that's what I should have been talking about. Let me just. You guys look at the structure underneath. At 62.46. What day was this? I think it was the 7th. There was a poor low. A poor low is a double bottom. That means there was competitive buying here. So if we get back down here, are those bids still there? Curious about that. Yep, earnings week ahead, right? Okay. Gosh. This price action will put you to sleep. These little chop zones. I think I am going to go get some exercise after this and then wait for better price action. There's the break. The why I have that blue line is I have a level at 62.60. See if that holds. If that breaks, we'll look for that 58.25 stop down here. Right. Let it now. What it's doing is it's price discovery a little bit. Let it go find its level. Yeah. First trade of the week, right, Phil? First trade of the week. All right, my friends, we're almost done here. Does anybody have any questions? So a little plug for our room. Yeah, good stuff, Phil. Come visit us at the Trading Syndicate. It's less than 50 cents a day. We'll teach you how to trade past those evaluations with our friends at Apex. Use the discount code. Do I ever trade Bitcoin? I own Bitcoin. I don't trade it. I just buy it when it. I have levels, and when it dips below those levels, I'll just buy some and put it away. My position is very small. Like it's really small. I got into Bitcoin late. I only started buying it in 2024. So what I do is when it drops under a certain level and comes back up, I buy a little bit, I put it away, and I don't think about it. Just in case the 0 and 1 Mafia get their stuff together. They're doing pretty well, right? But I don't trade it. I do own it. It's the only asset that I actually own for a longer term. The reason is because it's like a low float stock that the institutions are bid. That's the reason. That's the way I look at Bitcoin, right? There's only 21 million coins, and everybody wants to buy it now, so I'll just hold it and see where it turns out. So if overnight inventory is short, does that usually translate to buying in RTH? RC usually 60 to 70% of the time. But you have to remember that the president changed some macro stuff on the weekend. And I don't know whether or not that's going to stick or he's going to change his mind. So it's a little indecisive right now. So I wouldn't count on it. I'd just be a little cautious today until everybody wakes up and the institutions start back at work, you know? I wouldn't take any large directional trades. Scalping, fine. But until these guys wake up and start putting money to work and assessing what he's saying about tariffs, I would always be on the side of caution. Nice work, P. Hunter. And it's summer. And it's earnings season. Oh, we seem to have found a bid. Let's see if it holds. Yeah, always remember, folks, it's your money, right? Be a little snooty with your money when it comes to the market. Before you make a trade, pretend like that trade's asking you for money. You're like, I don't know. You really going to pay me back? Right? Be a price action snob. Right? Be like those rich people when you go to them with a deal and you ask them for money. They always look at you like, you smell. I don't know. I'll have my people call your people. Anyway, thanks everyone. Be smart out there, okay? If you have questions, DM me at any time. I'm JJ. This is the Trading Syndicate. And thank you very much for being with me, especially those of you in North America at this crazy hour. We will see you at 9 o'clock Eastern Time for the RTH session. And now I have to get on the treadmill before my girlfriend kills me. We'll see you guys in a little bit. Bye for now. Thank you so much.